So one of the things that frustrate people when they trade is an early low or an early trend reversal. Let's imagine you're waiting for a bit more of a pullback and suddenly the market already turns around, breaks above resistance. Is the low already in? It's a little bit too early. Have we bottomed already? I've missed my entry. I want to talk a little bit about that today. I want to talk a little bit about this issue that sometimes that last load doesn't happen. Let's go. Yeah, hello and welcome to another MCO video. My name is Ben. Today I would like to show you or share with you actually my kind of communication with someone who asked me about an early low. So what happens if a chart produces an early low? The market just doesn't form that lower low that everybody has been waiting for. The structure doesn't look quite complete yet to the downside. So is it even possible to turn around to the upside? What do? I don't see 5 waves up yet. Is a low already in? I want to talk a little bit about that because a lot of people get frustrated about these these events when a low is formed a little early. That's the same for a price top. Let's assume you expect the price to move up to a certain level in an uptrend and suddenly the price pulls back a little earlier than you would expect and you haven't really sold all of your position. You haven't taken profits, all of your profits. Maybe you started, but not all of it. So we want to talk a little bit about that. I've got an example here for you, which is the WIF chart. It's a cryptocurrency. It's the dogwifhat chart. The focus here in this update, or in this video rather, is not really about the chart analysis. It's more about understanding from a mindset point of view or also strategic point of view how to approach it. Now, what you can see here on the chart is the following. You can see that the market started a corrective pullback. The market started a corrective pullback here around the 23rd of May. I mean, we have a pullback, we have 3 waves down. As you probably know, if you watched tutorial updates, course videos, then you know that a 3-wave move down generally keeps the door open for higher prices. What we normally don't want in an overall uptrend is that the move down turns into a 5-wave decline. Now, what you can see here is that we had a rally which is labeled a 5-wave pattern in one scenario. Yeah, in the white scenario, it's a potential 5-wave move, which means that overall we're looking for higher prices. So the larger degree trend is up. The alternative scenario, there's always an alternative because we need to know what's happening if something breaks. The alternative would mean even one more high. So overall, we're looking for higher prices either way. And there is a support area, a standard support area. If we're already in the wave 2, then this would be the standard support area. In this case, the 78.6 to the 38.2 retracement. Now, in this white scenario, which actually was the preferred scenario, the market formed an A wave, a B wave, and then 1, 2, 3, well, 4, 5 was expected, right? Because the C wave has 5 waves. Now, what happens if we, though, break above standard resistance for a wave 4? This is a little high for a 4th wave. It's true. 4th wave, ideally, if it's an impulse down, should not break above the 50% retracement level. It can do that, however. So first of all, we need to understand, first of all, we need to understand, is anything invalidated? And the answer is no, because even if this was a downside impulse in a C wave, the wave 4 must not break into the price region of wave 1, as we've learned. But it is allowed to break above resistance. I mean, it's not ideal, but it's allowed to. Bear in mind, when we're dealing with a smaller time frame, you get a lot of distortions. But it's already an indication something is changing. But let me take you through the question. So the question was actually about the person is always struggling to identify if a low has been in place or not. Let's take this chart as an example. It's above resistance and went even a bit higher than the resistance I guess it would, yeah, I don't know what resistance $1.03 was quoted. I don't exactly know where that was here, but it's not so important actually. It broke above 96.4 cents. That's the key. So the person said, many times I have misinterpreted such scenarios. The break of resistance happened, but I don't see a clear 5-wave move up yet. That's the problem, right? Because you have a break above resistance, but no 5-wave move up. So are we already bullish? Have we bottomed? Therefore, the question is, where can I learn more to identify if a low is in place or not? Or is it too early to say? So first of all, I mean, we've talked in previous videos about when resistance breaks, we need to understand the structure. Is it a 5-wave move or a 3-wave move? Now, this at the moment is a 3-wave move. So my own approach is, I need to understand the context. This pullback overall is not deep enough to be really all of wave 2. It could be, technically anything's possible, but it's kind of unlikely. We have a break above resistance, so I'm kind of neutral then. Do we get that one more low? As long as it's still a valid wave count, I'm kind of neutral. As long as it's a 3-wave move, I see it as a corrective rally because it didn't really form a low where it ideally would have. So I'm definitely cautious. So I'm not really interested in trading this setup because it's kind of unclear to me, right? Had it formed that one more low, as per the most probable scenario, then formed or turned around, ideal. Okay, I would be much more confident. Like this, I mean, I'd rather avoid it until we get clearer signals because it's a 3-wave move up. So the trend is overall still down. It's at least a corrective rally only. Let me take you in detail also through my answer. So let me take you through what I wrote. First of all, I get it wrong too. Yeah, that can happen, right? I can get it wrong. I can get the wave count wrong. That's the very first realization that everybody needs to have. I mean, when you're analyzing the chart yourself, you can get it wrong, right? Especially on the smallest time frame. Where, I mean, you need to imagine you start at the larger time frame, right? You have a context. You go smaller, smaller, smaller. On each time frame, you have different scenarios and alternatives. So you have many, many scenarios all the way down to the smallest time frame. So at some point, you get it wrong, right? So the preferred scenario in that case, I mean, I shouldn't say get it wrong. It's more like the market might just choose the lower probability scenario. So sometimes the price just breaks out early because maybe the entire sector is going up a little further. So, but that's the first realization. I mean, analysts can get it wrong too. Now, often the low, the bottom that might have formed, I refuse to touch in my trades, or let's rather call it the low that I'm not calling a substantial low yet, because it's just not the ideal low. Well, it might turn out to be the low, it might turn around, right? And that can be quite frustrating. So I have to base my view on ideal standards and guidelines and rules. Okay, certainly guidelines. So if the market sometimes takes a low probability path and breaks out directly, honestly, it is what it is. We have to accept it. We can't change it. But my communication was around, that is frustrating if you are driven by FOMO, fear of missing out. But it can be quite liberating, quite freeing if you have trained yourself to think like a proper risk manager. So if you manage risk, then it is absolutely okay to sometimes miss a trade, because you know that your guidelines, your standards that are focused on risk management, they will keep you a lot of times from taking bad trades. So you wouldn't necessarily assume here that it's based on this wave count that a low is formed here. So you wouldn't normally take a trade. It can be that it still turns around and you miss the trade. That's welcome, that's trading, It can absolutely happen, but it's just how to deal with it from a mindset point of view. Well, if you focus on risk management, it's not a problem, because it's just not a trade you would have taken. That's point one. But if you are driven by FOMO, it can be frustrating. So, and that's a mindset that needs to be trained. But that's the mindset aspect. Then context. So I did say that many traders struggle with identifying reliable lows because they are zoomed into charts that are structurally weak. Context is everything. If you're spending time trying to confirm a low on a chart that's in a brutal downtrend, for example, or that has weak support zones, it's like treating a critically ill patient with a band-aid. Even a perfect looking 5-wave move in a bad context will often not lead to a sustained rally. So before focusing on wave structure, always zoom out and ask, is this chart even worth trading? Now, what are we dealing with here? We're dealing with a chart that's a meme coin that has quite a short chart history. That's not really in a real uptrend. It's just not. It doesn't have a long-term uptrend. So do I really want to trade this chart? Anyway, it's got a 3-wave move up initially. Any rally wouldn't necessarily be supported by the larger degree trend. I might decide to trade it because it's got a 3-wave move down, so I can lean bullish, but it's not really what we would call like a 5-star setup or anything. So that's the larger context. And then on the smaller time frame, we have 5 waves up. Yep, okay. We have a smaller time frame, 5-wave move up, and the pullback that just was not yet very, very deep. But overall, it is still not a great chart overall. So I just want to make sure, whether it's this chart or another chart, if you are dealing with a chart that is not great, any breakout, even an early breakout, might just break down again. Even if it tries to break above resistance initially, it might not be a stable rally until we see more evidence and a more solid structure. That's especially true if you have a long downtrend. Now this is more like a large sideways range and then a 5-wave move up from this swing low there in April. But the key here, I just want to communicate, make sure that you're not glued to the, 30-minute charts, 15, this is the 1 hour, okay, but really you could even zoom in further. A lot of people are getting worried about the smallest movements. Yeah. Depending on what kind of asset you're trading, if you're trading an altcoin, that can be quite difficult because they are very, very volatile and there are correlations with Bitcoin and so on. Still, that's just something to keep in mind. My takeaway here of that point was, when we talk about this chart, it's not a reliable low, so I wouldn't worry about it, right? If it's turning around to the upside, it's a trade potentially missed. It is what it is. But I wouldn't have wanted to trade it anyway. Now then, the other point is, not every 5-wave move means the low is in. Now we don't even have 5 waves up, okay? But let's assume we even get 5 waves, 1, 2, 3, 4, 5. Even that wouldn't mean the bottom is in. It has to fit within the broader Elliott Wave structure, within Fibonacci zones, and ideally show follow through with confirmation. So the price is broken above resistance. My communication was, that is something, and it's not everything. If it's only a 3-wave move up, that tells you there's no confirmation yet. Okay, so we have broken above resistance. We're kind of in no man's land. It reduced the downside pressure, but we are not in a very, very aggressive uptrend yet. We have not clearly any confirmation we've bottomed. We have first signal, yeah, but that's everything. And that does not confirm much. So that, I did say, that's not to say it can't become an impulse. It certainly could, but until 5 waves print clearly, I would treat it with caution. So if we get a break above resistance a bit earlier than expected, not a reliable low, if it's only 3 waves up, there's no reason to assume a low is in. We can watch it. If we get 5 waves up, we can call that a smaller degree wave 1. Then a pullback would be a wave 2, and we can go from there. But then it just means caution. It's probably bad to just chase this out of FOMO, yeah? Then third point was, Fibonacci is your friend. So are you actively using Fibonacci guidelines that we teach as well? Or are you just looking at the charts visually? That's a major difference. So when I personally, let's say my plan was to buy here. Okay, I missed it. I missed the low because it might be breaking out early. Then, well, I missed it because I follow strict rules and guidelines, right? I stay strict with the Fibonacci structure and the wave count. It protects me then 99% of the time. So I know where to set my stop losses and so on. And I'm not gonna over position, in a trade that is not in line with my trading plan. Now the downside is that you might miss a few, potentially really interesting looking lows that in the end turned out to be real lows, and then the price rallied early. But The upside is that you're not gambling, right? You're not guessing, you're following your plan. That's important. So it means you have to be able to distinguish between high quality setups and just a chart that broke resistance isn't necessarily a setup. And then the last point is, and that's more like a mindset thing as well, know yourself, right? Who are you as a trader? So it often gets overlooked. Your psychology will shape your chart interpretation. If you're always hunting for the next trade and you get FOMO, or you get, I want to trade something, and you see something break, then you get nervous about it and everything. So if you're always hunting for that next trade, you'll start seeing bottoms that aren't really there. It's kind of, you're looking for something that's not really there. So that you might have a bias, and you might look for, okay, is this maybe a low? And you will start wondering, and then you might see a low that's actually not there yet. Okay, so you see something that's not there yet. Oh yeah, it looks like a 3-wave move down, so I assume it's going up now. So if you get FOMO, then every pullback looks like a buy. So oh yeah, we've got a pullback, so I have to buy it. But is it really a high quality setup? This actually is not, so breaking above resistance is not necessarily a chart issue. It depends on how you deal with it, right? If that means you want to jump onto a trade because you feel emotions, not really great. Yeah? It's a mindset issue. So the better question is not really, how do I know the low is in? Those are my answers, right? The question is rather, what evidence do I need based on my system, my trading plan, my psychology, to say that the low is in? And what will I do if I'm wrong? Okay, that is much more helpful, much more productive for a trader. So that's just a little bit of a video around how to deal with maybe breaks of resistance, breaks of support. It just works the other way around as well. So I hope that was helpful. Thank you very much. Bye-bye.